Hey guys, today we're going to talk about advisory services as a bookkeeper. So you might have heard of this strategy in order to get better clients and make more money as a bookkeeper. So I'll talk kind of about the philosophy of advising toward the middle of the video, but I wanted to be as practical as possible and let you know these 5 areas that you can dig into to try to give your clients more financial advice. And these are spending, financial history, KPIs, looking for blocks, and competition. So let's jump right into spending. How can you find spending problems within your client's business? So first, let's pull a list of what your client is spending. What are their biggest expenses? So what I would probably do is go into QuickBooks, maybe look at the past year. Like right now we're in the springtime when I'm filming this. And so if I wanted to look at like the last year, I would have a complete 12 months to look at. So let's take all of the expenses and then sort them from biggest to smallest so that you can see like what are the biggest things that are drawing money out of this business. Then just start using your own logic and kind of think critically about a lot of these expenses. So is it necessary that they are paying $800 a month for advertising? Does it seem like their insurance costs are really high? Could they shop around a little bit and try to figure out if they can get a cheaper insurance plan? Are there any duplicates or things that can be consolidated? So I had a client who had different like storage facilities at different locations, and it was actually a lot cheaper to combine those as well as actually hire someone to create some digital records. Or maybe they have multiple subscriptions or subscriptions that they are no longer using. So these days we have so many different, things that are billed annually, like you're paying for Spotify, you're paying for Netflix, you're paying for Amazon Prime. So is your client actually using all of these services, or are they overpaying for anything? A business should really look at every single expense as, is this thing making me money? So a Netflix subscription for their employees probably is not making them money. Maybe it's a perk that they can watch during their lunch, but that's not making the business any money. However, maybe if they hire a copywriter or a marketing person, that is costing them money, but it's investment back into the business. Hopefully having those tasks done is going to make them more money in the long run. So keep an eye out for things that are not making money, as well as, is there anything that you can like rent out? So does the business have equipment that they can rent out to other, like if it's a lawn care service, maybe they don't use their lawnmowers on Tuesdays and Thursdays. Could they rent that out to someone else who does lawn care? Do they have extra office space that they can sublease to another business? So use your creativity a bit, think outside the box as to what they're currently doing and what can they do that's going to be more cost effective. Number 2, look at historical data. So in QuickBooks, it's pretty easy to pull a report for the last 3 years, the last 5 years. I love this report because you can really compare, the spending and the income. So maybe for the past 5 or so years, the Amazon amount has been like $500 for the year, but the year that we're analyzing, it's $3,000. So dig into that. Why did we spend so much more money on Amazon? Did the business actually grow that much? And so now we need more paper and more pens because we have more people? Was there some kind of office move, or was there like a supply stock up? So do we have a bunch of supplies sitting somewhere? Was it maybe just one big purchase that was actually office furniture that needs to be depreciated? So looking at that history will hopefully help you identify like weird outliers, and then you can analyze and you can dig into that as to why. And then you can decide, does that make sense, or do we need to make a change? And of course, this should also be done with income. So maybe your client is like a photographer and they have 5 different sources of income. So they do senior pictures, they do weddings, they do some like sports photography. And so for the last 5 years, the senior pictures had been making them like a bunch of money in August, maybe like $5,000 every August. But the year that you're analyzing, maybe they took a trip in August, or maybe they took on some extra weddings. And the client might not even realize how much money they've been making every August on these senior photos. So if you bring the numbers to them and show them in their reporting, then that's a pretty easy change for them to make. They can just not take a vacation in August, or they can set up their schedule in a way that is most profitable for their business. As I promised, I'm gonna let you guys know kind of like what I'm thinking and feeling about advisory services as a bookkeeper. So sometimes I get a comment that is like, you're not supposed to give advice because I'm not qualified, like I'm not a financial advisor, I'm not a tax preparer. And so it's true, I'm not giving tax advice, I'm not giving legal advice, but as a bookkeeper, in my opinion, let me know in the comments if you disagree with this, you can use your logic and your analytics and your creativity and help solve problems for your clients. So I've been kind of hearing about this and thinking it through, and so I actually just went through the class called Advisory Services from bookkeepers.com. So this video is not like an advertisement for them, but I want to be transparent about where I'm getting a lot of information, and also if you're interested in learning more and more about this, then then definitely check out this class. So here's the price right now. It's a little under $3,000, which does sound like a lot, but it is an investment into your business because adding on these advisory services with clients is going to allow you to raise your bookkeeping rate. So in the long run, in theory, you should be making that money back. So my video here is like a 10-minute like tiny introduction, but this one goes way more into depth. So I think it's 28 lessons. It's like 14 hours of teaching. It goes really in depth with all these financial reports, way more ideas than these 5 that I'm giving you. And then it also tells you how to market it to clients and how to present it to clients and that charge more piece. So enough about that, but use my link in the description if you heard about it from me, because that helps give me credit and support my small business. Speaking of, if you don't know me, I'm Morgan, and you can check out my website FinePoints.biz for tons of bookkeeper information and help and resources. And if you want more videos like this, subscribe to my YouTube channel. And let's get back to number 3, which is key performance indicators, also called KPIs in like the jargon of today's business world. This is just basically you and your client sit down and you figure out like a goal, like a metric goal that you want to hit. So maybe the goal is how many new clients they want to bring in. Maybe it is how profitable they want the business to be, or a percentage of financial growth they want to grow each year. I actually have a video all about KPIs. I will link it in the description box for you, but that goes into detail of multiple examples of key performance indicators you can track for your client and how to do it. And one other note about advising for KPIs is make a really good plan with your client, and you are the one to follow up on it. So maybe you're not the one to track every single thing. Maybe some of that is done internally within their office, but you should figure out kind of who is doing what and what cadence you're going to check in on these things, as well as I know it talks about in this class that I took, you can make some kind of dashboard. So that can be like as fancy or as rudimentary as you like. It can be an Excel spreadsheet. That's actually what I have in my business. I just have a shared spreadsheet with my assistant, and we track different metrics. So we track like how many visits my website has. We track how many classes I've sold. So those are things I've identified in my business that are going to help drive my profit. And then I have some accountability each month to check those numbers and see how they're doing. Number 4, I said look for blocks. So what I mean by this is like roadblocks, like blockages. Where in your client's business workflow do things slow down? Like where are we waiting for something? So oftentimes in a service-based business, this is going to be the fact that only so many hours in a week, and you might only have that one person doing the service. So if your client is a dog walker and they work 40 hours a week, then they're not going to make any more money over that amount unless they, of course, hire another dog walker. So think about that with service-based businesses. When does it make sense to hire or outsource different things? Maybe if you're in the medical field, the holdup, the block is insurance. So it takes time to get paid by insurance companies. So how can you kind of get through that block? Like, do we need to hire another person to call insurance companies and to follow up on those things? Is that going to help the cash flow for the business? Maybe the block is administrative. So we don't have someone who has time to make our appointments. So maybe then there's a digital option that will outsource that for us. So some of those examples got a little bit away from like the finance and the reporting, but of course there can still be those blocks in the invoicing process, in the bill pay process. And everything kind of comes back to the finances as well, because if you're looking at hiring new people to, combat some of these issues, is there room in the budget for that? Can we afford that? So that is definitely a very strategic way to help your client become more profitable with some of that advice, some of those advisory services. Number 5 is look at the competition. So are the rates that your client is paying like the industry standard? So if they're a construction company, are they getting the best deals on wood, on nails, on materials? They most likely have a source that they're getting things from, maybe like wholesale, like a salesperson or some kind of hardware store. I don't really know much about the construction industry, but make sure they are paying at or below the going rate for some of these things. And this is where it does help a lot to have a niche and to really get to know that industry, because then you kind of get to know how much stuff costs, and you kind of get an intuition for when things look off in the finances, or when something's too high or too low, or what vendors are reputable. So my niche is lawyers, and as the years go on, I am getting a feel for like what is the normal amount a lawyer should be charging, and that varies slightly depending on the type of law they do. Or I know that Clio is like a very popular law management system and I know the price for that. So that specialization is going to make it a lot easier for you. And then also you're providing so much more value to your client. Therefore, they're going to be more willing to pay a higher rate and you can justify charging more. Similarly, different industries have different like kind of standard percentages. So like for payroll, for example, some businesses payroll is going to be like 50% of their expenses and some payroll will be very tiny, like you only want it to be 10%. And that changes too depending on how big the business is. Thanks for sticking around till the end of this video and I will talk to you again next week.